Hello and welcome to this week's BizSmart Lunch and Learn webinars. Our weekly webinars are aimed to provide advice and share knowledge amongst business owners on key business topics and specialist areas. This is part of our service to our Smart Room members. If you're not already a member or a BizSmart client or would like to access our archive of webinars, then please visit our website biz-smart.co.uk and go to the Smart Room page. Our host joining me today is BizSmart Select member Hugh Matthews from Advantage Management Consultants. But before we start the webinar, can I ask you all to use the question mark function on your screen to post any questions that you may have for Hugh, and he will do his best to answer them all at the end of the session. Thank you, Hugh. Over to you.
Thanks very much. Okay, well, my name's Hugh Matthew, as Caroline said, and I'm a management consultant, and I help BizSmart members on a few topics. Intellectual property, startups and litigation are my specialities. This is a brief introduction to crowdfunding. I don't know how many of you are familiar with that. Hopefully you'll be a little bit more familiar with it at the end of this session. So, what is crowdfunding? That's one of the questions we'll try and answer today. Will it be right for me? Is it going to have any relevance at all to the way you run your business? If so, where can I get it and how much will it cost? So, what is crowdfunding? It's essentially getting a large number of individuals to provide you with small amounts of money for your business, rather than asking a single entity or a few people to provide large amounts. This can be in the form of a loan, of course, or equity, or even by something which I'll call a reward scheme, and I'll come on to explain that a little bit later. And all of this is done online. Traditional sources of finance that you're familiar with, of course, will be debt, borrowing money from somebody, equity, giving away shares in your business in return for some investment. And debt you could have initially when you start up a business from family and friends. You can go to the bank to borrow money. And I'm going to introduce you to something else which is peer-to-peer lending, sometimes called P2P, which is crowd lending. In terms of equity, if you're thinking of expanding your business or getting more investment into it, you could look for a potential partner, a business angel or something like that. You could make a deal with the devil and go to venture capitalists. And I'm going to introduce you to equity crowdfunding. All of these are traditional ways of getting money into your business, or the new ones in the case of the crowdfunding ones. And of course, as I mentioned earlier, there is another way of getting money into your business in return for rewards, which is in return for not a loan or any shares. So the history of crowdfunding, it's quite new. It started as a method of collecting many small contributions by means of an online platform, and that was typically in return for a reward. This is how it started. And in fact, it started in 1997. The first people to do it were a UK rock band called Marillion, who decided to get together, and their reunion tour of the USA was financed by crowdfunding. And they were the very first people to do it. Unless, of course, you live in the United States, where, according to them, it started in 2003, because that's when they started doing it. And that was with a jazz album, similar idea, if you like, through a platform, an internet platform called Artist Share. And Artist Share started this in 2003 and were the instigators in the US of this, and indeed it did grow in the US more than in the UK. In return for the contribution into the Marillion Tour Fund, fans were guaranteed a ticket to one of the gigs, probably for the best seats in the house. I didn't go myself, to see their heroes. And the band got all this money together and could take the decision that they could afford to go to the USA with all the costs associated with that before leaving the UK. In the case of the jazz album, it worked slightly differently, and people were invited to give different amounts of money. $10 got you the right to download the album, $250 got you a listing on the credits, and 10 grand made you an executive producer if that's what your ego demanded. And they raised $130,000, and that was used to rent the recording studio, pay the musicians, produce and market the album, and it won a Grammy. So again, I've not listened to it, but it was successful. So Artist Share in 2003 started off this this phenomenon in the US, and they were followed in 2008 by a company called Indiegogo, which is one of the biggest around still, and Kickstarter in 2009. And they expanded into other areas of the arts, into theatre, dance, fashion, film, video, those sorts of things. And then after that into social causes, animal rescue things, charities, health campaigns. If a young kid couldn't afford the medical insurance but needed an operation, for instance, they'd set up some form of crowdfunding to make sure that happened. In terms of business, they didn't move into the business sector until 2012, and that was because the US law restricted what they could do. But Barack Obama enacted the Jobs Act, which was Jumpstart Our Business Startups Act in 2012, which gave them a little more flexibility. And Kickstarter in particular responded to this. So they had a campaign to raise $100,000 for a Pebble smartwatch. I don't know if you're familiar with that. It's a sort of like an Apple Watch. And in 2012, this company decided they wanted to take this product, this idea, and develop it. And the idea was you put in $100, and when they manufactured it and tested it and got it out there, you'd get one worth $150 for free. That was quite successful. They used the money for development, tooling, production and marketing, and they raised $10 million. That's 100 times what they wanted. A similar campaign in 2014 for the Coolest Cooler Box, which is a cool box, but it has a pair of speakers and something else, I can't remember what. £50,000 was what they were after, and they got 13 million. So you can see that these are big amounts of money, and certainly got a lot of people talking about these sorts of methods of raising finance. So, is crowdfunding the right thing for yourself? It depends really on what you want the finance for and your view of traditional routes. So if you want money to expand your business for new premises or for just working capital, then there are ways of doing it, and your view on traditional against the newfangled ones will determine the way you perhaps go. So if you're looking for capital equipment or premises, you're likely to look for a loan, I would suggest. A bank or even P2P, peer-to-peer lending. They like security, and if you've got land or capital equipment assets, as they call it, then those are traditional ways, or even the new ways, to get that money. If you've got a new product that you want and it's got a lot of tooling cost, marketing perhaps, packaging, that sort of thing, again, a loan might be appropriate. You may go for a Kickstarter approach, but that really needs to be in the business to consumer field to get the right sort of level of investment, I would suggest. If you want to build a new standalone business, if you've got a very good idea but it's not quite in line with your traditional business, or you've got to do it with another partner, then you might look at business angels, venture capital, or crowdfunding and start a new business. That's another way of raising finance. Okay, so where can I get them? As I said, peer-to-peer lending for loans. I'll explain that in a minute. Kickstarter type platform for a reward-based incentive scheme, or an equity crowdfunding platform if you're looking to get new equity partners. Peer-to-peer lenders. These are the biggest peer-to-peer lenders in the UK, and you can see that a couple of them are only 5 years, 6 years old. One's been going for about a decade. They've all lent over £1 billion to people and businesses in the UK. They are members of a trade association called the Peer-to-Peer Finance Association, along with a company called Thin Cats, interestingly named because they are all ex-bankers, I think. Market Invoice, Lend Invest, Lending Works, Landbay and Madison. All of those are members of the Trade Association, and they are the only members of the Trade Association. So if you're thinking of peer-to-peer lenders, don't go outside that list, I would suggest. Who do they lend to? Zopa tends to lend to individuals for new cars, home improvements or debt consolidation. Rate Setter, one of the other, these are the three big ones. Again, lends to individuals but also small businesses and quite a lot to property developers where the assets are there to back it up. Funding Circle is the third one. Business loans generally between £5,000 and £1 million and somewhere between 6 months and 5 years. The UK government has just put in 40 million into Funding Circle as an investor, so they must think something of it, or maybe they just had 40 million spare. Lend Invest and Landbay only lend to professional landlords and developers. What's the cost? Well, it's how long is a piece of string, really. You can get interest rates as low as 5%, and you can get unsecured loans. What you can't get is unsecured loans at 5% interest. And as well as the interest, these people also have a scale of fees. Rate Setter don't publish what the fees are. You have to go and ask them on a particular case, but they are risk weighted. They cover arrangement and management fees of the loan, and sensibly they have a contribution to a bad debt provision fund. About 2%, somewhere between 0.5%, 2% of all these debts go bump. Funding Circle publish the fact that their fees are somewhere between 2 and 5%, depending on the length of the loan and the assessment of your credit risk. There are risks, I think, associated with peer-to-peer lending, and in the last couple of years, a couple of lenders have gone bump. So here we go, Trust Buddy, I like to put that aptly named, you can trust them of course. I can't spell bankruptcy, I'm sorry about that, but they filed for bankruptcy shortly after they opened in the UK. It's an American company. And in 2016, Funding Night had to be rescued because they ran out of cash. It's a young industry, you can tell that, because if you look at Funding Circle, and bearing in mind, Funding Circle is huge. They've lent £1.5 billion in this country, and they are the third biggest lender to UK SMEs after RBS and Lloyds. I suppose putting them in that bracket with those two gives you some idea of the uncertainty around. But they had a turnover last year of only 32 million, and they managed to lose 40 million pounds on that. Fortunately, they just secured 120 million pounds of investment, so they're probably ready to go on for a couple of years yet. But it's a bit of a shaky area in some regards. It is like a lot of fledgling businesses, particularly those associated with the internet. The numbers are huge, and the bump when it comes is just as big. Mentioned reward-based crowdfunding platforms. I'm not sure how appropriate that's going to be to our listeners here. Kickstarter and Indiegogo are the two largest still. Crowdfunder UK is quite a big one in the UK. I don't know how you pronounce that. Sponsumes was a French-founded crowdfunding platform, and their fees are about 5% of all the monies raised. Plus, they have a nice processing fee through credit cards or PayPal and things like that, which they whack on another 3 to 5% in some cases. So equity-based crowdfunding platforms in this country, the three biggest are Crowdcube, Cedars and Syndicate Room, and they differ slightly. Syndicate Room profess to be backed by experienced angel investors. They're mainly for startups, and their fees are about 4% of the money raised. A £1,500, it's not strictly speaking a setup fee. It only kicks in when you actually when you're successful in funding what you want, and that's for the legal side of things. But they do have a kicker in that they charge somewhere between £1,500 and £3,000 annually until the exit of the investors. So that can be a bit of a kicker. I've mentioned there they're both EIS and SEIS type of schemes, and I'll if you're not familiar with those, I'll explain those in a minute. SEIS is mainly, if not exclusively, run by lawyers, which is why their fees are a bit more. 6% up to 150,000, that's an important figure. And it does come down 4% for up to £500,000 then, and 2% thereafter. And their £2,000 completion fee is for the legal side as well. They're mainly EIS based schemes because they tend to be larger. And Crowdcube is the one who started it all off, even before the Americans, in 2011, mainly for startups, although they have moved into raising large loans as well, which is quite an interesting one. These are the biggest and probably the best, I think. 300,000 armchair investors. They've just put their fees up, 7% now, plus a completion fee of £1,750. And they are, almost all of theirs are SEIS or EIS, so I better see if I can define those for you now. These are schemes for encouraging investment in SMEs. They started some time ago, the Enterprise Investment Scheme, EIS scheme, and that's for companies which have been trading less than 7 years, and the Seed Enterprise Investment Scheme is for companies which have not been trading for longer than 2 years, very young companies or startups. And they are geared towards giving the investor income tax relief, capital gains tax relief, capital gains tax exemption, and if the thing goes bump, loss relief against income tax. The SEIS scheme is a brilliant scheme. If you put £10,000 into a company and invest in their shares under an SEIS scheme, the government will immediately, HMRC will immediately give you £5,000 off your current year's tax bill. It doesn't matter whether you pay tax at 20%, 30%, 40% rather, or 50 or 55, you get £5,000 back. You can carry that back a year if you had a better year last year, and there's a maximum you can put in, which is £100,000. You also get some capital gains tax relief, and the capital gains tax exemption on profits made on the investment are 100%. You don't pay capital gains tax when you invest in SEIS companies. As I said, if the thing goes bump, you just relieve all your investment against your maximum rate of income tax. A company has a maximum of £150,000 they can raise in this way. EIS is slightly bigger schemes. Maximum for an individual is £1 million. Income tax relief is only 30%. Again, you get full capital gains tax exemption and you get loss relief. And the company can raise £5 million under an EIS scheme. An example. Here's an example close to my heart since I own the company. FLOODKIT. We raised £135,000 under an SEIS scheme through Crowdcube. We had 110 investors. Took us 6 months. Crowdcube fee was about £8,000. The lawyer's fee, as I mentioned before, was £1,750. They were very, very good. And we did a video for the pitch to the investors for £1,500. Basically a new company. 2 people came to me and said, could I help them start a company? And they had a good idea for stopping flood water coming into your houses. We did a lot of development, which is what we wanted the money for, but we had done some development prior to going to Crowdcube for the pitch. We had a number of patents, and though I say so myself, I think it was a good pitch, and we raised the money. Sadly, shortly after that, my 2 colleagues decided they couldn't get on with each other anymore and left me with the business. So anybody who wants to join a business, come and help me out. No, it's doing well, and as you can imagine. But in particular, the raising of the money was a success. Crowdcube are a very young company with very young individuals running it, with very little business experience, but they do know how to run a crowdfunding platform, and that's the key. The other key is having 300,000 investors at your fingertips who can put in anything between £10 was, I think, the smallest amount, and 15,000 was the largest amount. So we've got 110 investors, and they go from very small to very large, and the ones that cause me all the grief are the very small ones because they ask all the questions and want to be informed every 5 minutes. So there are good things and bad things about equity crowdfunding. Now, can you now answer these questions? I suspect not, but those are the questions we posed at the start of this. Hopefully we'll be able to answer any questions you have, but if not, we'll try and find the answers and get back to you.
Great, thank you, Hugh. You've had a few questions coming through. So your first one is from Paul, and he asks, is there a minimum amount of money I need to raise to make equity crowdfunding worthwhile?
It depends, I think, to an extent on what you want to raise it for. I mean, if it's a really good idea, then it depends on how much you want to raise, and you could if it's a really good idea, of course, you can raise a bit more and then just keep it in the bank for future expansion. Looking at the costs, of course, associated with it, the costs of 7%, if you want to raise £50,000, then you've got immediately £3,500 on the Crowdcube cost. You've still got the £2,000 or so, 1,750 for the lawyer's fees, and of course putting the pitch together, depending on how much help you get, you'll have to do a video, and it'll be at least £1,500 because I think those prices have gone up since we did it. So you're talking about close to £10,000, and if you're only doing £50,000, it's a big chunk. So I would say probably £100,000 is as little as you want to go for, but it does depend. How long is a piece of string?
Thank you. Philip asks, how much marketing do you need to do to attract the investors, or is it all done on the platform? Excellent
question. To attract them on the platform, you have to do a very good video pitch. It's a bit like having 300,000 dragons in Dragon's Den. It's very like that, actually. And there's a lot of question and answer. You're encouraged to have a forum so that these people can have a question and answer session with you. You have to do a business plan, and there are two schools of thought on the sort of business plan you do. I like to do a very practical, sensible, conservative business plan, and I've seen business plans on crowdfunding platforms which promise turnovers of £350 million year 3 from a standing start. So you have to do a sensible business plan, in my view. Marketing you need to do, you need to be able to go and hold events, if you like, in London in particular. If you've got some meaty investors down there, we did one at my old business school down there, and we got 5 people there. Every single one of them invested more than £10,000 when we did a presentation to them. So it's really worthwhile doing that sort of thing in person, if you can. No, not if you can, you should do it. And the crowdfunding platform will organise little events as well. Again, most of them take place in London.
Okay, thank you very much. Next question is from Simon. What sort of security will I need for borrowing money from a crowd lender or peer-to-peer?
Well, peer-to-peer lenders vary in their requirements for security. I think it depends on the length of loan, the size of loan, certainly your credit risk, and they will judge each case by its merits. I don't have a lot of experience in this field, and I think Ian Priest actually would probably know more about this, our banking specialist in BizSmart, and I think a number of them, thin cats in particular, I know, because they're ex-bankers, behave like bankers, and therefore they want everything. They want your house, they want the assets of the company, they want your dog, everything. Whereas I think others, certainly Funding Circle, have the reputation of doing certain unsecured loans, but they will be at a higher interest rate. Interestingly, the two companies that went bump both advertised to investors returns of 12% or more, and they both went bang. So I don't think that's the right way to do it. I think a lot of people in the peer-to-peer field still want security.
Okay, thank you. Your next question is from Stuart. How do I go about becoming an investor?
Well, that's online as well, actually. It's, let me think, an investor. Peer-to-peer lending, I mean, Funding Circle, for instance, I know a little bit about. You can go and put some money into there and browse. You browse the various offers, if you like, of people wanting to borrow money. So you could do one of two ways. You can either leave it to Funding Circle and do what they call auto bid, which is here's your £100 or £1,000 or whatever it is, and they spread it over a number of companies to spread the risk, and that attracts a certain return, if you like, and risk. Or you can pick your own. And you can pick your own individually on individual companies, and you can go line by line and see the company, what they want the money for, all of those things, and say, oh, that sounds like a good idea. And then that's 6.3%. Yeah, I'll have £500 of that or something. In equity, again, although I'm a member of all three of those companies, I've only ever really studied Crowdcube in some depth. I'm not a great fan of seeders because they tend to take money from both sides. I can tell you that they will take 7.5% of what you make as an investor as well, whereas Syndicate Room and Crowdcube don't. They take all the money from the person who wants the investment. So in Crowdcube, again, you just sit in your armchair and you browse through the companies and say, oh, I think this is nice, and you can ask them for a business plan, and then when you've done that and you've gone through all the hoops that they have to go through under the FCA rules to make sure you know that your money is at risk and you could lose the whole lot. Once you've done that, you can sign up, and then what happens is if the investment is successful, that means if they raise at least 90% of what they're asking for, then it all goes through fairly seamlessly through the online platform. They're experienced at doing this now, so that works out quite well. Was that the question?
Yeah, that's great.
You apply online is the answer.
Okay, thank you very much, Hugh, for hosting today's webinar. I will be sending out a copy of Hugh's presentation and his contact details out to you all very shortly. So if you have any further questions, then please contact Hugh direct. I'm sure he will do his best to answer all the questions that you may have. But before we close, just a quick reminder that this webinar is part of our service to our Smart Room members. And if you're not already a member or a BizSmart client and would like to access our archive of webinars, then please visit our website, biz-smart.co.uk, and go to the Smart Room page. Thank you all for joining us, and see you next time.